Good afternoon, everyone, and welcome. Thank you all for joining the Bretton Woods Committee's 2021 International Council Conference. This year's conference has been focused on exploring shared multilateral solutions to the global economic challenges and opportunities presented in the wake of COVID-19. All week, we've been discussing everything from debt buildup to vaccine access, climate change, digital currencies, and we're very fortunate to be joined by the World Bank president to get his views on many of those topics here today. I don't want to keep him waiting for long, so as usual, just a few quick notes from me. We will have time for audience questions, and we ask that if you have a question, you please submit it by sending it in through the Q&A function in Zoom. We'll collect these, and then we will call on individuals when it's time for Q&A. If you do submit a question, we ask that you please remain on standby so you can unmute your microphone when it's time for Q&A. I also want to quickly thank our sponsors for this year's International Council Conference, SICPA Holdings and SCIC. We appreciate your generous support. So quickly, just a quick introduction of our speakers. Of course, our featured guest who needs no introduction. We have with us today the World Bank President, David Malpass. Thank you so much for being with us, President Malpass. Always good to have you here at BWC.
Thank you, Emily. Looking forward to it.
Great, and he will be joined in conversation by Mr. Bill Rhodes, who, as you all know, is the Vice Chair of BWC's Board of Directors and Executive Committee. So, Bill, I'm going to go ahead and turn it over to you to kick off the conversation.
Thanks, Emily. And as always, David, it's great to see you, and I appreciate very much, we all do, that you agreed to do this session during this very difficult and special week that you have. The last time we spoke at the time of the interim committee meeting in April, we discussed the impact of COVID-19 on developing countries and their road to recovery. It's difficult to understand and believe that that was 6 months ago. Can you give us a sense of how developing countries are doing today, what challenges they face, and what is needed to recover from this terrible bout of COVID-19?
Hello, Bill, and it's good to be with you. We started this back and forth in 1986. Imagine that, trying to get more growth in developing countries. You are already a luminary in the field, and I was just starting. So as we think about the last 6 months, you know, there's good news and bad, and this is what the course of life and the course of developing countries. The world is recovering. But now we have inflation, which is a new problem, and the waves of COVID have continued, and the vaccination rate in many of the developing countries is still low. Some are up, which is good, and of course the production of vaccines has gone up rapidly, which is helping. So the supply of vaccines is higher, but for the developing countries, the growth rate is still is disappointing. I'll give you one statistic. For the advanced economies, the per capita income is going up at a 5% rate. That's per capita income for advanced. And for the low income countries, it's 0.5%, so 1/10 the rate. That's the opposite of what you want. In order to narrow inequality, we have to have the low-income countries growing faster per capita than the advanced economies, but it's 1/10 as much. So that's the problem, and I think there's lots of work yet to go on debt, on vaccines, and climate change issues are an added challenge. Food insecurity and inflation are also problematic, and the risk of interest rate increases as central banks respond to the inflation.
Another key challenge, David, is a high amount of debt, which we've discussed very often, carried by the poorest countries. And the debt service suspension initiative, DSSI, expires at the end of this year, and you've been very active in this, and the common framework is in place. But a recent article in the Financial Times, actually a couple of days ago, mentioned that you were not happy with the progress being made. And what you said is that you had a big concern that there is not a process to deal with this large amount of debt. And as you mentioned, this will be exacerbated as the major central banks of the world start tightening and raising interest rates.
Yeah, so we did a report at the beginning of the week called IDS, the International Debt Statistics. It's part of the DRS system at the World Bank, which keeps track of debt data. And it's important because knowledge of how much the debt is very important to seeing which countries have unsustainable debt. So it showed that for the low-income countries, their debt is now $860 billion, and that was up 12% in 2020. So it's going the wrong direction. We're trying to find debt relief practices. In March and April of 2020, I called for a moratorium on debt payments by the poorest countries due to COVID, and Kristalina joined, and we pushed a joint initiative. The G20 took it over and took it on, and it became the DSSI and now the common framework. There are two different aspects of the problem, where the DSSI was a suspension of payments that was supposed to extend to all of the creditors, but ended up being an overly narrow group of creditors. The private sector didn't participate, and even some of the official creditors didn't participate in the DSSI. And so it didn't save as much money as it was intended to. As we look to the end of 2021, the SSI is expiring. And the G20 hasn't discussed an extension of that. There were some calls for that during the week this week. We're having the World Bank IMF annual meetings, and also there was a G20 finance ministers meeting for nearly 4 hours yesterday, discussing the world environment in general. And this morning there was the IMFC meeting of IMF members, and I'm an observer at that engagement. And so there's discussion of what to do about debt, but not a clear direction on the DSSI. Kristalina and I have called for a standstill that might be available to countries in 2022 if they asked for, or if they got an IMF program related to their overall debt through the common framework. So that might be a different concept of how there could be some debt relief for the poorest countries. And so coming to the common framework, then, that was set up in October of 2020 by the G20 as a way to reduce the debt burden for countries that had unsustainable burdens. 3 countries have applied for it, it's not an application process, I misspoke. So 3 countries have asked for common trade framework. That's Chad, Ethiopia, and Zambia. Zambia is also in default on a Euro bond. And so the World Bank and IMF have been working to try to find a way to implement the common framework for Chad. So it's held up by the lack of participation of private sector creditors. And there's one major one, Glencore, that is not coming forward enough in terms of how to find a way to reduce the amount of debt. As we look to other countries, the poorest countries, then this becomes a challenge because the world environment is not welcoming for them, and the debt burdens have gone up. So we have quite a few countries in either unsustainable debt or high risk of unsustainability in their debt, and not really a path or a process of providing debt relief. The Paris Club can do some of that, but one of our reports a year or 2 ago showed that of the official creditors, which used to be dominated by the Paris Club, they are now, China alone is some 65% of the total official debt, so versus much smaller amounts for the various Paris Club creditors, such as Japan and the United States. So this creates a challenge within the international financial architecture that there's not really a path through at this moment.
Well, you had mentioned that particular problem the last time we talked at the interim committee, and you were trying to push that with your colleagues. but unfortunately, we haven't seen the progress that we had hoped, as you said. In talking about this subject, we obviously need to talk about better debt transparency. And you might want to talk about that, because if you don't have the transparency here, then you have a real problem, because you have various players. We have the official sector, as you know, we have the international financial institutions, and then we have the private sector. And this has been a real problem, as you and I have discussed before, and actually getting a solution here. And I should mention just in passing that Bretton Woods' latest paper, which will come out in November, is trying to grapple with this and come up with some suggestions that we can give you and the IMF and various governments involved in this, the Paris Club and others, to what they might do. But I'd be very interested, because this is something that you and I have felt very strongly about, even before you ever joined as president of the World Bank.
Exactly right, and I'm glad the Bretton Woods Committee is taking or is adding to the information on this. So I'll try to go through several concepts of transparency for sovereigns. For if there are governments, then there should be knowledge of what the debts are. And that there should be an ability to have a reconciliation of those debts. That's done if in the corporate world, there's a bankruptcy process where if a company has unsustainable debt, it goes into a bankruptcy process where there's a requirement of disclosure by the various creditors to say how much they feel they're owed, and then there's a resolution, a process of resolving. There's not a similar thing on the sovereign side. So what that means is many of the contracts that are being written, and there was a recent paper some 6 months ago showing that it's stated of the sample of Chinese contracts that were sampled by these academics, all of them had non-disclosure clauses in them, and many of the large ones had collateralization as part of them. This is problematic for sovereign debt because it means that the burden of the debt is extended into future periods where the government will be gone. The current government is basically committing the people of the country to a debt that will have to be paid by future years or even future generations. So this is a big challenge, and we've advocated that there not be these non-disclosure clauses in the contracts. And that there be transparency also and disclosure of the terms of the debt. That means the interest rate, the maturity, and what some of the covenants are related to the debt. And then as a related issue, it's the collateral that's being required as protection for the creditor. This again shifts the burden or gives the creditor much stronger control of the country or of the situation than may be good for the people of the country. In effect, you're giving away your assets early to the debtor, to the lender, and so this is a big challenge as we look forward. Now, I should step back a minute and say debt is actually a good way to finance growth of a country or of a company. We want to create a situation where debt can grow because the country is growing. And so it's not debt that's wrong, it's the lack of transparency within the debt. Bill, I'll do one more term for people and then one example. Reconciliation is this process where you should compare what you think you're owed and what other people think you're owed and have some kind of disclosure of that. So we try to do that. That has to be done. So for Chad, which is in the common, which is asked for common framework treatment, that has taken 1 year in order to try to get the various creditors to say how much they're owed. And so you can imagine a country that's has an unsustainable debt burden. It's an obstacle for them to enter the common framework if it's going to take a year to find out how much the world thinks they are owed by that country. It took a long time for a creditor committee to form. So we've worked with the IMF to develop improvements or implementation methodologies for the common framework. And we're beginning to implement some of those. For example, Ethiopia has now formed a creditor committee. But some of the other things that we think would be useful are not available. For example, as is done in the Paris Club, in the common framework, the debtor themselves are not very involved in the process, which makes it hard then to be able to move forward. I mentioned earlier the standstill concept that if there were some ability for the country to stop making these large payments on high interest rate debt that's governed by non-disclosure clauses, if there was some way for the country to suspend those payments as they work out what to do with those debts, that would help the country. Because under the current circumstances, they're having to make all of the payments on the debt that people have already established is an unsustainable burden. So I'll give you one further, there are lots of details within transparency. I won't go into all of them, but I'll be meeting in a few minutes with the Russian delegation. They participate in the IDS publication that I described. This is the International Debt Statistics, which is one of the flagship reports of the World Bank. But unlike other countries, Russia doesn't give loan by loan details of the debt that they're owed. So as you come to a reconciliation process, it makes it hard because there's not an enumeration of the loans in advance. So we're encouraging Russia to be more transparent in their debt. And this is not unique to Russia. This is a handful of countries that could have better participation in the debt statistics, and that would help expedite the reconciliation process. And the reason that's important, this is all sounds like mumbo jumbo, but the reason it's important is because for countries to actually develop, they have to have a path that gets them through the debt overhang so that they can begin to borrow more and to grow more to get their companies actually started hiring workers. And right now that's stalled.
Well, a lot of what you're talking about are things we're looking at in our report. I don't want to enumerate them because you already have. But one of the things that I think is really key here, and your opinion would be very, very important, is do you think that we're going to get the buy-in of China as the largest creditor nation to the emerging markets and particularly to the poorer countries? And you might want to mention any success that you think may be coming down the line in this regard.
China is a member of the G20, and the G20 itself did create the common framework, and so that's a step forward, and we welcome that with China. And then the government of China has looked for ways to participate in the implementation of the framework. But China is also composed of individual creditors, different parts of China, ICBC, the China Exim, the CDB, China Development Bank, and these have different governance structures, different participation within the world economy. So I know, Bill, that you've been involved in the northern part, well, in the Andean countries for a long time, and so there's some welcome developments in the outlook for Guyana and for Suriname, but a challenge for Suriname is the balance of the debt, which, as I mentioned before, it used to be that Paris Club creditors would have had the majority of the various debt. But Suriname's in a situation where the Paris Club, the official bilateral creditors that are members of the Paris Club, have actually a small portion of the debt, China a larger portion of the debt. So one of the steps forward that's needed for Suriname is to find a way through the debt that's some of it is in default already. So this gives you an example of a challenge. So we're hoping to see China be a fuller participant, I've made the case that this would be good for China because they would be allowing countries that have unsustainable debt to find a path through, and that creates better markets for the future, and they would have their share of those growing markets. So I think it's I don't want to call it a global public good, but you can think of it as beneficial to the world's biggest economies when the growing economies can have a path forward through debt. That's certainly one of the logics behind bankruptcy law, that there has to be a way when debts become unpayable, there has to be a way through the contract, through contracts, in order to find a way forward into the future.
Without a doubt, and this is one of the mandates of the World Bank to stimulate growth. And I think when you talked about the Paris Club, of course, China is just an observer. They're not a full member of the Paris Club. So I think you have a lot of work to do with both the Russians and the Chinese. And I know that you were spending a lot of time on that. Finally,
Bill, I'm sorry, I should clarify. I'm sorry, I didn't mention earlier. China's not a member. Russia is a member of the Paris Club,
right,
which we welcome. And that's been a significant development. So everyone has invited China to join the Paris Club. They've so far declined, and I don't have any indication that they're going to change that direction.
I think the major point here is that we get all parties to work together on the plan that you're outlining and the work you're doing with the International Monetary Fund in this regard, bringing in the private sector, bringing all parties to the table. Finally, I'd like to turn to a favorite subject of yours, which is the upcoming replenishment of Ida. And this is so important for the poorest countries and the poorest people in the world. And so if you can talk about what you're doing to push Ida and what particular Ida 20 and what you think the possibilities are here, because this is something that is really needed at this point in time, given all we've been discussing here today.
Yeah, thank you. If I could, I'll describe to people why Ida is different. It's part of the World Bank. It's replenished every 3 years. We've accelerated that replenishment this time because of COVID. So it's doing a hurry up, after 2 years of Ida 19, we're now working to finish the replenishment called Ida 20, meaning the 20th 3-year process for Ida. It brings together the donor countries, of which you know the names. So United States is a big donor in the UK. China is a sizable donor in Saudi Arabia and some of the European countries. And that puts together a pool of money that then Ida now borrows against in international capital markets. We're trying to get the US to allow the SEC exemption for Ida, which is allowed to all the other multilateral financial institutions. So the Asian Development Bank and the Inter-American Development Bank and the Asian AIIB and others are able to issue in US markets through an SEC exemption, but there hasn't been the time yet for the US to do that with Ida. So we're asking for that. And we're asking donors to put money in. So let me tell you about the size of this undertaking. Ida has grown over the years. It's the single largest source of grants and of 0% interest rate loans to the poorest countries, the Ida countries. That's 75 countries in the world that are on the low income end of the spectrum. And so Ida 19 was some $82 billion, and so now we're shooting for more than that in Ida 20. And I want to go through just very quickly the numbers. If we get to, let's say, $95 billion as a total replenishment, that will last 3 years, and it's achieved by the donors putting in money, let's say $27 billion from the donor countries over the 3-year period. So that would be $9 billion per year from the world that is then leveraged through the IDA process by the World Bank through capital markets, bringing in, mobilizing private sector capital for sustainable development. And so the key number there that I want to leave you with is $9 billion. So $9 billion per year, which is actually not very large by the standards of the numbers that people are talking about for the climate challenge and for other challenges. So $9 billion per year is the world's biggest fund for the poorest countries. And so I'll make the case to your audience, to the world, that 9 is not really, it should not be such a challenge for people to do. In fact, I'll make the case for 10 billion per year. That'd be a $30 billion donor contribution, which we could then go above $100 billion for the IDA total window for 3 years. IDA has is a unfragmented platform. So it does health, it does nutrition, it does food security, it does climate. There's an over cross-cutting climate agreement with the donors and with the borrowers to improve, to do projects in adaptation in climate, and it does gender issues that are important, small business issues and jobs creation issues through IDA. So it's the African leaders have been outspoken in asking the world community to put money into IDA. So it's been a little frustrating this week because, well, no, it's been fine. You know, there's been very warm support from the donor community and from the borrowing community for IDA. So we're just continuing to ask each individual country that can. I was recently in Israel, asked them, can they raise their IDA contribution? I just met moments ago with Turkey's finance minister, who's here for the meetings this week, and Turkey is a donor to IDA. I was in Moscow in June and talked with President Putin and asked him to increase the size of Russia's IDA contribution. And as I mentioned earlier, China is a donor, and on down the list. The UK, as you know, is reducing its ODA budget some, but we're hoping that the UK can maintain its IDA contribution. In recent years, they've been the biggest contributor, bigger than the US, and we hope for sizable. Japan is committed to a large contribution, and I think China, I'm hopeful that China will increase its IDA contribution in this cycle, recognizing that its economy has grown. It's one of the beneficiaries of the global system, the global economic structure. So we'll be making the case to China to increase from its previous already generous level.
I know you've made yeoman's effort, as we can hear, on getting at this increase of IDA. And although we're running out of time for our discussion because we want to allow time for for questions, I have to say that I know that you have been working hard on the whole area of corruption, which was a big point of Jim Wolfenson, which is a real problem today with all of this COVID money that gone around, and some of the problem cases have come out. And I know you have made this a point of order in the World Bank, and I think you're to be congratulated on this because it is such an important area. And so with that, you and I could go on for hours, but you have other things to do which are more important. And I know we have a lot of audience questions. So Emily, I'm going to turn it over to you.
Yeah, thank you, Bill, and thank you, President Malpass. And right on cue on the corruption point, we do have a question from Frank Vogel. So I'm going to go to Frank and ask him to please unmute himself and pose his question.
Thank you, Emily. It's wonderful seeing you, Bill, and looking so fit and young. President Malpass, a quick question. First of all, by the way, it's wonderful what you say about IDA. After all, the Bretton Woods Committee was created because of an IDA crisis in 1982, and I was in the middle of that. And so it's wonderful to hear what you say, and we'll try and support. Really good news. You may not even know about it. Very recently, the World Bank entered into an unprecedented partnership with Transparency International Zambia. I'm a founder of TI, and with the Partnership for Transparency Fund, which I chair, and we have 50 world retirees working with us. as volunteers. And it was a partnership to support a project to monitor COVID and healthcare relief in Zambia, to guard against vaccine fraud and corruption. It's a wonderful first step. The bank has never done it before. It's done it through a trust fund. Now the question, because I know Emily's getting impatient. The question, sir, can we look to the bank to make this, if it works, to make this a model? Because if we can, it will bring enormous amount of confidence of many people against corruption in healthcare, for example. But in order to do it, we have to find a way that the bank can speed up its processes. We negotiated this for a year, even though the COVID crisis is so urgent. So I thank you for the precedent. I thank the bank for all its help with doing this, but can we get the bank to really come on board and partner in specific projects to counter corruption like this?
Frank, thanks for the work you did in 1982 and work in Zambia. I met recently with the president of Zambia. He was here in Washington, D.C., and I was happy to hear the pace of change that they are doing under his new leadership. It's remarkable. He won an election, which is hard to do in anywhere in the world, and he won, and there was a transition of power, which is interesting. And so thanks for TI. I don't know the answer to your question of whether we could do it. To all of the CSO related or the people on the call that are working in countries, I encourage you to push the World Bank from the country level. I've tried to set up, and we have set up a very responsive country director network where so if there are countries, Frank, where TI can make a difference, one thing to do is talk with the country director, and then if you don't get an answer, wait a week and then call into Washington, and we can try to find out how to move it along faster. Transparency is critical in allowing the countries that have like Zambia that have had such a difficult time to move forward faster. So I want to encourage that effort.
Thanks, President Malpass, and thank you to Frank and to you for bringing up Ida and for sharing with us where that stands. And of course, the Bretton Woods Committee will always do its part to build support for Ida. We have a couple of questions on debt, so we're gonna return to debt, and I'm gonna go to Miguel Schloss. Miguel, if you're there, would you mind unmuting yourself and posing your question?
You hear me now?
Yes. Hi, Miguel.
Okay. Hi. How are you doing? Congratulations. You have a tremendous job in front of you, Mr. Malpass. Very challenging. And what I am wondering is, taking the long view, what are the lessons, if any, of past debt relief and moratoria experiences? And what does this mean about how one should approach them from here on? What I find striking in your presentation is that a number of the countries that you mentioned were also the countries that some 20 years ago had the same problems. And what do we do so that 20 years from now, when we talk again, we don't see these cases any longer, and these countries have dealt with their adjustment issues, corruption issues, etc., so that they don't become addicted to those repeated debt reliefs, and in fact move on to the next phase.
Yeah.
Thank you.
Emily, I'll go ahead with that if you want. Yeah. That's a very well stated point. Bill and I lived through the lost decade for Latin America. That was based on commercial bank debt that was then securitized as part of the solution with a haircut or ways that reduced the net present value and also increased the liquidity of that debt. So that was an important step. And then over the years, there have been different, as soon as the kind of international system adjusts, then lenders find another way to to make loans into countries. So I think the lesson, a key lesson is the transparency lesson, that there needs to be an ability of the country and the people to know what the terms of the debt are and to avoid giving up collateral, because it's very hard to value it properly. I wanted to say two other things. HIPC, so there in the 90s, there was a buildup of debt to poorer countries, and that gave rise to the HIPC, Highly Indebted Poor Countries Initiative. It took years and years to legislate through the various governments, including the US government, as did the Latin debt crisis. You know, that took a long time for it to, that was a lost decade. In a way, HIPC was a lost decade for Liberia before it got treatment. I was just in Sudan. They are one of the final beneficiaries of the HIPC initiative. It took I don't know, 20 years or so to reach the decision point that was reached in June for Sudan. So it was a successful debt reduction initiative. Somehow Sudan had been able to accumulate $55 billion of debt that will be largely written off, which is good, though some creditors are still coming forward on the Sudan debt. But that shows you the complexity of doing one of these. And as we talk about, I mentioned Suriname, or as we talk about Zambia, the countries that we've mentioned today, each one right now is a case-by-case difficult situation in order to restructure the debt. So I think the world needs a broader initiative for the poorest countries, those with unsustainable debt. I avoid calling it a new HIPC initiative because it was too hard to legislate that. I don't think we can afford to wait that long. So what I'd like to see is an effective implementation of the common framework that could move things along faster. I wanted to mention one other thing, looking forward, as you were asking to do, the statutory process in New York and in London is so strongly in favor of the creditor that it makes it hard to restructure debts, even for unsustainable debts. The cards are all stacked for the creditor. So for example, Chad, that we're working on, issued the debt and China, often the debt that they're lending to countries is under British law. And then once a non-payment occurs, it becomes a very, very forceful, all the might of the legal system is on the side of the creditor. So I've argued that there should be some leveling of the playing field. That could be done by changing some of the rules of liens. And I'm sure many on the call are much more knowledgeable on this, but the legal system is able to attach assets way beyond the scope of the debt in even the poorest countries, and that's a challenge. Thanks.
Thank you. And as you were answering, we had a question come in on Sudan that I think you answered in that response. So I'm going to next go to Mahesh Kotecha. Mahesh, would you like to unmute yourself and please go ahead with your question?
Thank you very much, Emily. Thank you very much, Mr. Rhodes and Mr. Malpass. Mr. Malpass, both you and Mr. Rhodes have been very expert at the private sector's involvement in restructurings in the past, and your experience obviously is very valuable. What you know from what you said about Ida is that there are $3 for every dollar of public sector money, and that $3 can be left behind if you do not allow a bail-in, that is a participation, a crowding in of the private sector. The common framework has been a failure in the sense that the private sector has not been allowed to bail in because it is forced into a default before it can bail in. As you know, when you have a default, you cannot come back in because the mind of the investors is not very exercised. That is very exercised at that time, and the markets flee. So isn't there a possibility to bring in the private sector by figuring out that there are ways to ring fence the debt relief from the public sector, so it is not used to give money back to the private sector, but rather used for social and climate issues, and the public sector then can be satisfied that it is not financing bailout of the private sector, but the private sector can remain in place and provide more funding through exchange offers that do not involve a default. I was in the rating business. I can help you structure that.
Thank you. I'll take you up on that. So 2 recent restructurings that might give insight on what you just said, though I'm far away not an expert on these issues. In Ecuador, there was not a public sector restructuring. There was a private sector restructuring. It was supposed to have new money from some of the private sector creditors. In this case, China creditors. That didn't come through. So rather than bailing in the creditors, you ended up with a shortfall in the flows, in the external flows. And another example is Angola, which went through a restructuring a year ago, where a challenge is CDB, China Development Bank. It sometimes is a private sector creditor if that avoids a restructuring, and then can choose to be a public sector creditor if that avoids the restructuring. So in the case of Angola, we were able to get some increase in the fiscal spending by the government with a trade-off with some of the debt relief from some of the creditors, but it's far from ideal process. So if you have techniques, I would like to hear them. We're struggling.
Thanks, President Malpass. A lot of interest in debt and a lot of ideas coming from BWC. I'm going to ask just a final summary question. We've had a couple questions come in on vaccines and also on climate. So maybe if you could just share some concluding thoughts here on, how do we speed up vaccine access and vaccine distribution, and what is the World Bank doing? And then obviously with the World Bank's new recently released climate action plan, COP26 coming up, what would be your wish list for a successful COP26?
Yeah, that's great. We've been talking a lot about debt because Bill and I are interested in it, but from the standpoint of my day, it represents maybe 10% of a work week or 5%, and these other issues that you named much bigger, Emily. So thanks. As I said, I was in Sudan. I observed the vaccination program going on. What the World Bank has done, starting over a year ago, was set up individual vaccination financing for countries. We now have 61 countries where we can provide financing for the vaccines themselves and for the deployment. This is a very important step in it because you've got to put all of it together with the financing to reach even the poorest countries. And so I'm happy to say today we have 250 million doses under financing, with financing attached from the World Bank, and I hope to double that. We have financing that can quadruple that if we can get enough doses through the system. So we had the AVAT system, the Africa Vaccine Task Force that has contracts, that was able to get contracts for 400 million Johnson & Johnson doses. So then we can immediately fund those once the contracts are written. So I've been encouraging people this week on 2 counts. One is for the countries that have a high vaccination rate to release their doses and allow them to be delivered early to developing countries that have a lower vaccination rate. So that has to be a conscious choice by the countries that have the excess available vaccines. For example, the European Union has committed Johnson & Johnson doses that they've had, but it's been very hard to get those doses actually to be allowed to ship to Africa. And the second thing I've urged is for the developing countries to seek contracts, actual delivery contracts for doses. One of the missing points in this vaccination process is the developing countries themselves thought that they were going to receive doses, but didn't receive doses because there weren't contracts to receive them. So they keep going to the back of the line. So we're trying to get countries that need doses to get at the front of the line with delivery dates. And I'll mention the climate change action plan, which occupies a lot of my time. which is to create a structure where we can have a lot of projects that actually reduce greenhouse gas emissions. There's been a missing part in the global dialogue where there's been a lot of discussion of how much funding is needed and how much renewables are needed. But the critical gap, or the thing that's missing, is projects that reduce greenhouse gas emissions. That means we need to measure them and say where the priority emissions are, and then what the plan is to reduce them. We're working with South Africa, where World Bank would help with the NDCs of South Africa, and then with the plan that would allow a reduction or a decommissioning of coal-fired electricity, that we need to do one coal-fired plant per day through 2040 in order to grapple with the problem. And so that you can judge the magnitude of this problem and challenge. And then also within the climate change action plan, moving up toward COP26, we're putting together the financing side, or we need to recognize there needs to be a huge amount of money that flows in through grants in order to help countries make the transition away from high greenhouse gas emissions. We're also working on adaptation. So in the World Bank's Climate Change Action Plan, half of our financing, which is the largest of the multilaterals, the World Bank provides more financing for climate finance than all the other IFIs combined. And so we're committing to growth in that number going forward, and with 50% of it going to adaptation, which will help the poorest countries.
Yeah, that's great. So much of it goes to mitigation, and we really need more in terms of adaptation. We are over time, so I want to thank President Malpass for being very generous with his time. Bill Rhodes, any final comments before we let President Malpass off to his next meeting?
Yeah, I would just like, thank you, Emily. I'd just like to thank David for all the good work that he is doing at the World Bank in this most challenging of times. Certainly on climate change, COVID, and so many others. And I can promise you, David, that you will be one of the first recipients of the Bretton Woods report on transparency, which will be coming out hopefully in early November. But thank you very much again.
Great. Thank you, Bill, for all you're doing. Thank you, Emily, and bye all.
Thank you. Thanks everyone for joining us. Bye-bye.